So this channel's been a few years in the making, and I think it's a great time to go back to the basics, back to the beginning of what is the infinite banking concept and how could people, whether they're families, business owners, individuals, how can they use this concept to move themselves forward financially to achieve different types of goals? And that's exactly what we're going to talk about today, the basics. What is the infinite banking concept? So let's jump into it. In your perspective, what is the infinite banking concept? And maybe more importantly, what isn't the infinite banking concept?
Well, what it isn't is it's not about life insurance. It's about controlling the process of financing in your life, whether it's personal or business. And that's one of the big misconceptions about infinite banking. Everybody thinks it's about life insurance. It isn't. Nelson Nash, in his book, Becoming Your Own Banker, clearly states that it's not about insurance. It's about the fact that, number one, we finance everything we buy. By that, he means we're either going to borrow money to make a purchase and therefore pay interest, or pay cash and therefore give up interest. There's no free lunch.
Exactly. And a lot of times you'll hear people say, I have an infinite banking policy. And there's really not such a thing. There are policies designed to implement the infinite banking concept. But as we know, Nelson discovered this. When he discovered this process, he had a regular whole life insurance policy playing off your shelf from your broke-ass brother-in-law.
Well, it was actually his brother, and it was a policy that he had purchased in 1958. And now fast forward to 1981, interest rates jumped up from basically 8.5% to 9.5% to over 20%. And Nelson found himself paying like $50,000, $60,000 of additional interest that he hadn't been prepared to pay.
Was that on conventional debt, a mortgage, or?
It was on a commercial loan on a commercial property that he owned.
Okay.
And as he was going through this process, he was trying to figure out how in the world he can keep the property and make the payments. Because in his eyes and his mind, he couldn't do both. And he knew that if he sold the property, because interest rates had shot up so quickly, the value of the property was dramatically depressed from what he had just recently purchased it at. So what's his solution? He didn't have one. And then, lo and behold, almost as if it were divined by God, he gets his policy statement from a family insurance policy he purchased from State Farm back in 1958 from his older brother. And he noticed the premium was $389 and change. And he noticed that by paying that premium, his cash value was going to jump by 4 times, roughly almost $1,600. And he immediately realized that's the solution. I've got to get my life insurance premiums equal to my mortgage so that at some point when my mortgage interest rates jump up and my mortgage payment goes up as well, I'm going to have a cash value increase large enough to absorb that increase in my mortgage. And that was the genesis of the infinite banking concept.
Well, let's look backwards though, right? To when this happened, because it's something we see happen every day, right? Being controlled by the process, by that banking process, instead of being in control of that process. And that illustrated that statement and concept so perfectly, right? Because today, whether it's a balloon mortgage, whether it's home equity loans, we still have the potential of mortgage rates or loan rates increasing, right? Especially in businesses, they don't have those fixed terms, right? So with a business line of credit or a home equity line of credit, you'll see when interest rates go up, your interest rates are going up as well. It's not controlled. And what happens is a lot of times people are only paying the interest on their loan to keep their cash flow going. And when the interest rates go up, that's when the control is lost, right? Because now that extra interest payment wasn't baked into their cake, and that money was already being spent elsewhere. So that's where the wrench kind of gets thrown into everything. And that's when creative solutions are necessary, unless you had the foresight to implement this and really make sure that you're in a position to be in control of this financing function in your life.
That is so important. So think about what happened here. First and foremost, he created a pool of money that he owned and controlled. Mm-hmm. Now when he took out that policy, he bought it for death benefit. Make no mistake about that. But as time went by, the cash value grew, and now he had a substantial pool of money from which he could draw, and he can utilize or tap into through the loan feature to help pay his mortgage payments. Mm-hmm. But then Nelson was trained as a forester. So he thinks 70 years in advance. And like he used to say, I'm not going to be here, and probably neither will you, but somebody is going to reap the benefits of your foresight. So he realized that in order to basically never have this problem again, he had to get his life insurance premiums, and they were traditional, regular whole life policies with no paid up additions or anything. He needed to get his premiums equal to his mortgage payment, and that's what he went about doing. And now think about this, thinking long term. He was buying insurance that would have no cash value for 2, 3, or 4 years. Mm-hmm. But that's the way the man would think, and that's literally what saved him.
Exactly. So going back to what is the infinite banking concept, it's the process of how you use your money, right? First, and it starts with, I believe, having the foresight, right? Would you agree?
Absolutely.
So that foresight of what am I going to need in the future, and then how can I guarantee that it's going to be there?
And that's a great point, because you may not know what you're going to need in the future. You may only be planning on based upon what your situation is today, but you really have to have that foresight as to what the situation can be or may be down the road. When things are going well, that's great. But what happens when the proverbial crap hits the fan? What's your plan B? What's your exit strategy? What's your way around that difficult situation?
All right, so I think as I conceptualize how to define this concept, I would say it's how you are using your money, right?
It's a process. It's a process of how you use your money. It's a process of being in control of the financing function.
Right, and it all starts with building that pool of cash that you have full liquidity, use, and control over, and then going from there, right? So there's options. Once you have money, you have options. That's a key, right? So it could look like using it to get out of credit card debt. It could look like using it for a down payment on a home. It could look like investing in real estate. It could look like investing in the stock market. It could look like using it to help supplement your retirement income. The options are limitless.
It could look like remodeling your home or putting a new roof on your property or buying new furniture or landscaping or whatever it is, right? And so what did Nelson's infinite?
Exactly.
Right? But again, it all goes back to the process. And more importantly, It goes back to being in control of the process.
Right, right. So once you have the pool of cash, you have something to use it, whether it's a purchase, whether it's an investment, whether it's a remodel. The next step is to play the honest banker, right? To put the same value on your money as the bank puts on theirs. Because at the end of the day, everything we finance in life is financed, right? We're either paying interest for using someone else's money, or we're giving up interest by paying cash and avoiding giving the bank our interest, right? And this concept really allows us to regain control of that interest as well and not give up the opportunity cost associated with making purchases.
Exactly. And here's the point. When you talk about being in control, when interest rates were really low, people would borrow money from banks because they were paying 2.5% interest or 2.75% interest.
Free money.
Well, almost.
Right.
And then policy loans were being charged at 4%. So it didn't make sense to borrow against the life insurance policy. But now fast forward to about a year ago, now all of a sudden interest rates from a bank are 8.5%, 9%, 10% in some cases. And the life insurance policy loans are 5.5%. The point is, if you don't have the foresight to set up that pool of money through the insurance policy today, you don't have the option to borrow from or against the policy in the future when interest rates rise. The point is, you have the choices, and that's control.
Yeah, that's control, that's freedom, but it's also, I think, important to underscore the fact that it's not about interest rate. It's not about rate of return. It is about that control and that freedom. And one of the things we talk about frequently is, not to get hung up on the interest rates, whether that's the rate of return on a compounding basis within the policy or the interest rate being charged on the loans, right? Because at the end of the day, the numbers are the numbers, right? And if you're playing honest banker, you're going to pay yourself back at the market rate instead of that policy loan interest rate, because you see the value in your money just like the bank does. And you're not going to give up that opportunity cost just like the bank wouldn't.
Exactly. That's such a great point.
Anything else important to know about the infinite banking concept, other than, building up that pool of money, making choices, having the option to take advantage of opportunities, and then once you do, leverage that pool of cash, pay it back, and put the same value on it as the bank? Anything else besides that? Or is it just perpetual from there, right?
And again, it is perpetual. And then you build your system, right? Think about this. When a bank opens up in a neighborhood, they saturate the neighborhood. And then after they saturate it, what do? They go to another neighborhood. So if you're building your system through a policy, that's great. But when you max out that policy, what should you do next? Open up another one.
Yep.
Because that's the way the banking system works. And if you want to be in control of the banking function, you have to mimic the system.
That's a great point as well, right? Because I always tell clients when I'm speaking with them to start where you are, start with what's comfortable for you, right? The first step is the most important, right? Getting that first policy and implementing it and actually using the policy to take advantage of these options. But as cash flow becomes naturally more efficient, whether you're paying off high interest debt or you're taking advantage of opportunities and have some more income coming in, or maybe you get a raise at work. Hopefully we're all earning more money as time goes on, and that wealth has to reside somewhere. And once you start this process, once you take that first step with your first policy, you'll realize all of the advantages of using this concept in your life. And then you're able to insure other bodies, whether that be a spouse, a business partner, children, grandchildren, nieces and nephews, getting the whole family involved. And what happens is that infinite the infinite happens, because we have large sums of money that are going to be passed down from generation to generation. And I think that's really key, is making sure the generations are all educated on this concept so that it doesn't have a break, right? So just because they come into a pool of money, they don't go and spend it and give up all of that, the generation of that sacrificed to put that in place for them, right? So the education is really vital with this concept, especially as the generations go on.
Well, so think of it this way. The founding generation, the first generation, they recapture the opportunity cost of all the purchases they had, but it's recaptured through the death benefit. They pass on that death benefit to the next generation. The opportunity cost doesn't stop because they received a windfall. It continues. The meter keeps running. And if that next generation abdicates their responsibility as far as being a good steward of that capital, then they could make it difficult for the next generation. But Nelson saw that this can create generational wealth, and that's the way he implemented it in his family.
Exactly. And I think another key here is, you know, we think about life insurance, we think about death benefit, we think about the cost of the premiums. By setting it up this way, it's not a cost. It's building assets, number one. And number two, it's not giving up control, because you're able to leverage against it to make those purchases that we all make, right?
Exactly.
As long as we're alive, we're making purchases. So, you know, it comes down to making your dollars as efficient as possible, not giving up lifestyle. You know, we're not talking about giving up lifestyle in order to provide generational wealth. We're talking about making the same purchases, just kind of changing where the money's coming from. And that money's coming from your own pool of cash that you own and control, right? So it doesn't have to stop with your generation. It could go down, right? So your children could borrow from the policies, the grandchildren can borrow for the policies. And in doing that, there's an opportunity to teach them how this process works and how it could work for them, and possibly how they should be using money in the future, right? To set up and keep this perpetually going on an infinite basis. Well, thanks for joining us today. I hope that was a good, comprehensive explanation of what the infinite banking concept is, what it isn't. Leave us comments down below. What do you think about the infinite banking concept? Have you been implementing it for a while? Do you have questions on how to implement it? Let us know down below. We'd love to hear from you. Also, if you like this video, be sure to check out these two. We picked them out special for you. Also, if you like this video, don't forget to give us a thumbs up and hit that subscribe button.
Thanks so much for watching our video. And remember, it's not how much money you make.
It's how much money you keep that really matters. We'll see you in the next one.